Hello and welcome. As today's date comes in that of the 17th day of December, 2020. It is a Thursday. Like always, all bets, trades, and of the like within each's own risk and their own reward. And I'm going to talk about the stock market and really melt up in general because it looks like that's what we're going through here. And I remember even watching a documentary way back in the day, and we're talking like over 10 years ago. This was done by way old YouTubers like George for Title and Vision Victory type people. Like it was called Meltup. I think it was inflation.us, a company that came and went way back when. And they were talking about how everything's going to go up in price big time because of inflation. And I was even hearing recently, apparently, I don't know, I was just talking to someone on the phone recently about how they're saying not long ago, but a decent amount ago, was talking about how in 2020, the amount that we've created is like inflation as far as currency supply and all that type of stimulus type of deal. Like we're talking like, well, I don't know. It's a lot. I don't know what the number is. It's definitely more than 30-50%, I think. And when are we going to see all these inflationary prices? And they're saying, well, once the vaccine's available and all these things come out kind of deal, people's fears will recede, people start spending and all that, and the inflation will just start to get out of control. And I think this could be some valid points that will be coming into play. Because right now we're seeing gold, and I mean, right now Dow Jones looks to me. The long story short, this thing looks to be going out very well. This looks to be breaking out. Intermediate term move, I'm expecting 10% in the next few weeks, 2 to 3, 4 weeks, a 10% move, or hit to 33,000. We're going to show you why in here. Going over technical analysis. Resistance was established here at the end of the summertime into the autumn. Right near 29 thou. Establishing some support a couple of times down in here. Able to support the double hit prior level of resistance in the middle of November. Establishing the resistance point on November the 16th and congesting. It's been congesting at that point extremely well ever since. And I'm going to go through some of the things that I've been stating so long on this channel for a term. My way of looking at technical analysis. And that would be the labels showing strength amongst the 18 average of highs. Is it doing on the check mark? Ka-ching. Yes, it's what I'm seeing. And the way you play when you see strength amongst the 18 average of highs is you buy, sell, is you buy and then you sell when it goes higher. But when you have a situation when you're seeing strength amongst the 18 average of highs for several periods, you have a lot of time to be able to get in there. And I'm not buying this. I'm just saying that the setup here, I mean, we hit this high on November the 9th. Then we hit it on November the 16th. Then we hit it on like the 24th, 25th period. And then we come up to it on the December 4th and 5th. And after the low on December the 11th, we've now come up to it December 15th and been holding for the last couple of days at the 18 highs. That's an extremely strong setup to me. On the shorter term time frame, 4-hour term, I know there's a little bit of these gaps here and there. But what makes this run a little bit nicer than before, I mean, here we haven't seen above the 18 average of highs, has a little wild pullback below the lows, but it holds it. Have a little bit of a run here and comes down to below the 18 close is not shown. And rising up nicely again, just continuously making these higher lows. And when you're doing this, especially when the large trend lately and its whole life has been bullish, then you do got to give the benefit of the doubt to the buyers. And when you test resistance support, and most certainly resistance in bull trends, the more often you test it, the more likely it is you take it. And when you take out key trends like this, and you can see when I scroll back, it's even deeper than that. For this level of resistance, you can even just scroll it down like more accurate, like around there. Came up to this point in November at 6 in the morning. Second week. Well, second week, 6 in the morning, whatever. But 1 hit, 2 hit, 3 hits, 4 hits, 5 hits, and now we've been able to see how it's holding and staying above it for that significant period of time. Can we get anything more from this general area? Well, let's go back again to the daily. And we can see in here that we have the level way back here. So we've had a retracement after the large fall. We also had these previous highs, well, way back when is June of this year. Comes up to 27.6. And then after successfully correcting that move, this is a successfully correcting stage, retracement from key high to key low, it gets above the resistance second week of August, manages to establish that high close to previous high from the start of the year. Successful retracement with an interesting failed move before, but looks like a big move. I'm seeing this all the time recently. I don't know what it is. Every market seems to have it. I mean, this in itself is a big enough failed breakdown, but I'm really talking about this one here. And now we're showing the strength amongst here. It is what it is. I mean, so within it, we take a look at this on the weekly. And I'm going to switch this up to a different exchange. This is just basics, precious metals, crypto, stuff like this. Silver is $33 Canadian and $2,400 Canadian. But within this, on the daily, this is why I didn't want to use the other. I mean, I just don't like these gaps, so that's why I used the other one. But I got more data in this. I can go back to like over 100 years. So I can look back at and I will, at the 1930s crash. But yeah, I like how it's holding and staying above this previous high on the weekly like this. So as it goes, failed move, fast moves, all that type of crazy stuff. I'll put a line right here. That was the support in which it established back in here. A few days it hit that. Kind of this, it held and stayed above it, so I can even draw another line as well. So if you're back to this point in here, if we're going to have any big moves, I mean, this is just one of. I mean, this was the first area. Now, I would have said 23, but yeah, watch it for 21 to be. So, I mean, that's pretty big if we get there, but that would be a matching. We kind of want to make a higher low from this if there's going to be any down prices. A lot of the talks you'd be talking about 23x. I remember doing stuff like that. 23 times above the 18 average of highs. I remember doing. This was. If you look back, this would have been probably sometime around June, July. You might see a stock market video I did. Why, if you're interested in this. But I remember doing a video. This was from a previous video I did for how many times it had fantastic moves. No, it would have been after that. That would have been recent. It would have been sometime earlier this year I would have done that. Like months and months and months ago, like mid-year or whatever. So when it come down to it, we didn't support either one, but it was that V-shaped formation. However, gold and Bitcoin did this V-shape and recovery much better because you're in up phase at this stage. You're at all-time highs. You had this high of about 11,000, then 14,000. And then breaking 14,000, well, now you're in uncharted territories, you're in bull market stages, you're always making higher highs or new highs, all-time highs. Every day, every week, or so many times, like 50 times a year you're making, or 20 times a year you're making a new all-time high on good years. And then you have, you're still in that mode to that degree, making higher. But at this stage, well, after this happens, now you're in retracement from this high to this low. And I calculate, and I'm not going to put them in, but you're 38.2, 61.8. And then when you get to like 76 point, like if you can see markets like this holding and staying above like 25.6, that's telling you at least going to go to previous high, which is exactly what it has been doing pretty much since May and June. And all the markets, as mentioned, the Bitcoin, the gold, the silver are doing that. And let's just show a quick example of all of them. Well, maybe not silver, but gold is a good primary example. Although silver's kicking ass too, of course. But we can see how what it had. This was the down move. This was the retracement. It already got well above that 1700. Now, of course, it's still getting back to its all-time highs from the previous years, but as far as the intra-year situation was concerned, the V-shape was faster. It got past its previous highs much quicker. and then was able to extend those gains. But of course, within, I'm not going to show much gold information on this. It's still in retracement mode. Actually, no, not really. No, it's not. Silver's in retracement mode still, and big time in retracement mode still from 1980. But it's breaking retracement mode on gold because it's barely getting above previous high and holding, staying above it right now, attempting to go into uncharted territories, new all-time highs, as was shown with the Dow Jones breaking 14,000. So let's go back to it. That's DXY. Get rid of these lines. And looking at this just on the monthly chart as it is, to me, I do believe that this is ready to break it. I haven't explained the weekly monthly because that's the big reason why I'm thinking it's breaking out. But so I haven't got to that point yet. I wasn't planning on moving to the gold, and Bitcoin, Bitcoin of course had the same thing. Anyone seeing my video has already seen it. And if not, I got a whole bunch of Bitcoin charts on my old videos. I got some interesting videos. In fact, I'm actually getting more and more of my older videos. We're talking 10 plus years old, 8, 9, 10, 12 years old. Getting some comments, more comments than I would expect. On average, maybe 1 to 2 a week, which is higher than it used to be, 1 to 2 a month. Okay, so again, I like how this weekly chart is breaking out, but the monthly to me, again, this is where it's at. This is telling me a lot and why I'm confident of the melt up. And when I talk about 33,000, that is the next key. Okay, that's a statement resistance level. I don't think I've ever used statement resistance level, but I'll explain what it means very soon. But before we do that, this was the resistance it established in January of 2019. Or the last time it was below the 18 average of lows. Complete V-shaped recovery here. Piercing down below that. But within the next period, it got to the 18 average of highs after crushing below it. And that's not uncommon in markets to have those fast moves. But still, how are you going to react to it? Because it could very easily resist the highs, the closes, the 18 average of highs. Then this thing, which may be starting to go a little sideways, will then start to reduce. But no, that never happened because the very next period after that, from here, it got past the 18 lows and into the correctionary phase solidly. It spent a decent amount of time within it because the next 2 complete months, it pretty much was in at the entire range. Then even the next 3, it was trading above the highs and into the, really from the 18 closes to the 18 highs move. But that was a big move in itself because you can see in this high how you get barely above the highs, come back to the not shown 18 average of closes, and more importantly, making a significant higher low to this, to the point it doesn't even have to touch this low area. And now we've seen in the month of November how we had a 11.8% up month, which pretty much, I mean, it microscopically has now gotten past all-time highs from the start of the year in February. Thus, the complete retracement from key high to key low. It is now retraced about 107 or 108% or whatever, 109%, whatever, I don't know. High, it would be, let's find out exactly. I don't want to. It is log 30,277 divided by 18,213 divided by that of the log of 29,374 divided by that same low number of 18,214. And you probably get a number of somewhere around 1.07, 1.08. Because it has retraced more than 100%, maybe even 1.04, 1.05, I don't know. It's noticeably above 1, but not much above 1. Because it's just barely broken the resistance. It's exitation of the 18 average of highs as I look at it. And just scrolling back to way back when. I mean, this goes back to, holy crap, this goes back to the turn of the previous century. We can even, and you know, it's interesting when you look at it, that the 1932 bottom resisted the start of the new century highs. Just saying. And then you had retracement from this high to this low. It took a long time, didn't get out of it until like 1950. It took 2 decades to do retracement mode. Nice little sideways correction here throughout the 60s and 70s. I've heard that called a silent crash before. And really, it's been one run from here. We've been in the bull market since 1980. Really, I mean, I don't have access to the quarterly anymore, but what's the story since that time frame? Let's take a quick look at it. You've got limited action below the 18 average of lows. Limited action here. Extremely limited there. A little bit before the 2008 move, or the 2002 move bottom. A little bit more here, but so limited. This is the best it's had below the 18 lows. That's the best it's had below it. Not much here. I mean, that was nicely below it, but it was so quick, as I talked about already. One complete large up run within such, because it broke this resistance here, up move, and the 1987 crash. Oh, I forgot that. Whatever. But up move, 87 crash, goes up. There's a little bit of sideways stuff in here, but not much. Then we have this little story here of it going like this, and the rate of ascent increases. Then we have this sideways action in here. A little bit of scare tactics tell you, hey, it might go down a bit more, and it does, but only a bit more, not for long. Then the recovery within the 18 gets it above. It stays above the 18 average of highs and barely gets above this. It was really a failed breakdown followed by an extreme failed breakout followed by an extreme failed breakdown. So there's your extreme failed breakdown. But again, we can see within this just very quick correctionary moves coming in here, not resisting the lows, not resisting the highs, staying within this, and then retracement mode from here to here. Then after breaking retracement, it kept the trend alive as it was, because the whole trend is just this. Had a little bit of sideways consolidation here. And then one final leg up higher. No, maybe not, though, because the trend is not destroyed. Because we've got this uptrend moving in here. Had this little bit here. A small scare. A little bit of sideways point, and now exitation right now. That's my view of the market. So you can tell me all you want that the stock market's going to be crashing and everything. And my counter argument to that is what I recently just said about 3 minutes ago. The limited action it's had below the 18 lows. And that's the best it's going to do. This was a good run right here. I guess it was the best it had. Oh, sense here. Well, these are the two ones that it's needing to beat, but at some point, yeah, it's going to have a down move at what level point, but up from what high? At 30,000? Up here, 100,000? Does it go up here in whatever time and then have a move from 100,000 down to 36? So many different ways it can go down. This is priced against the U.S. fiat currency. And it doesn't matter if it's fiat currency. And inflation for a lot of different things is going to go up. And to me, it goes to the stock market, it's pretty evident and clear. Stocks are companies of a business that sell things or services of whatnot. For most likely fiat cash. But these businesses might end up, if fiat cash goes by the wayside or they just change in time, maybe other currencies, cryptos, gold, whatever, might come into play. But either way, the companies might survive. How many companies went by the wayside down in here? And in 2021, in 2020 itself, for past present tense there, 2021, 22, 23, 24, so on and so forth. How many businesses are going to go down by the wayside? Those stocks ain't going to do so well. How about those companies that do well and survive? Or even, especially the ones that do well, let alone the ones that survive. They're going to be kicking ass, especially the ones that kick ass within this, the ones that just evolve and become so popular. Whatever, this company is ranked 72nd today for whatever all-purpose category I'm talking about. Maybe they're 72nd. Maybe in 3 years from now, they're ranked 12th or 8th or 5th. Well, whatever that stock is going to go way up, especially with what would be major inflationary pressures. But I wouldn't be surprised. And another way of putting this is, this is good for options betting. I don't do that. But in the sports book, if they got different things like, the way I've seen sport books work before is, I'm just going to do a little bit of drawing to do this. They'll give you a screen of a market. I remember doing this back like over 10 years ago and 5 years ago. With like gold markets, silver markets, stock markets, this market as an example, whatever, Amazon, Apple, whatever. And it might be like, say, well, right now, maybe it's 1 o'clock in the afternoon, 1:05. And you got they're showing you 5 minutes worth of data out of an hour. And you can make a bet for price action to be above or below this line kind of deal. When the time frame goes. So you have the market move, and then, of course we'll assume that this was boom, and all the winners would cash. And of course the bets to go down here would lose. Very common game. How you play that game, and I knew, is you need to look at a market and say, in X amount of periods, can I state that it's going to be significantly higher or lower than one level, thus the percentage chance. And in this example here, if you're to give me 12 periods more, and we're playing that game, these are realistic levels. And I wouldn't be surprised, as I mentioned, I forget what term I used to say, I just said whatever words to start. Like the first move, what I'm meaning by what I stated, and this is where the 33 comes in play. I wouldn't be surprised that over the next few weeks it has a move that comes up to here. But what happens after that, it wouldn't surprise me we're going to be moving into these higher levels again, further. Now from this is like, again, this is what I'm thinking, like January to Super Bowl time frame, February. A move like this comes into store. But I also got to realize that when the Dow has a consensus great move, it can grind its way up. So we could have a lot of grinding phases like this. So this could take us into like next year. It could be like 36. We could be at 36, 37,000, 38,000 for the year. And it's a stock market year of 25, 26%. And it just does, again, something like this. That's one of the aspects. And that kind of how I mean, if things don't go wild, I'd expect it to have just it's the Dow. And one thing that I find kind of interesting is I'm expecting and predicting, and whatever happens, happens. I don't care either way, especially because I'm not trading it. A 10% move to 33. 10%. And conservatively, I might get into Super Bowl, but I really do think even well before the Super Bowl, which is the first Sunday of February when I say Super Bowl, mid-January even, like a month, 3 weeks. I mean, that would be a spectacular move for Bitcoin if it could do 10% in 3 weeks. Just a quick update for you. Today, that's not up as much anymore. Pretty much is 8.7% for the day for Bitcoin. Another way I want to go over, and I remember thinking this earlier in the day that I should put this in the video, so I will. I'll go back to the Dow now because of such, but I mean, what a year it's been for the Bitcoin. And we can see in here that it broke out from 10,000. It's been like crazy, crazy moves. If we take, let's see, what kind of gain did we have for the year? December is the final year of the month. Bitcoin closed at 7,100. What's that? Well, if we multiply that number by 3, is our current price larger or lower than it? And barely higher would be the answer. It's done more than 200%. But we'll just do 3x just to stay. And that's for the year. How much is it up from these lows? These lows. Well, from these lows here, what's the low in here? We got 2 2/9. We'll do $2.31 just to make things easy. Bitcoin's up 10,000 times since then. But anyway, let's just keep those numbers in mind. 200% and 10,000 times. Go back to the Dow. As far as 10,000 times, okay, class. Oh, it's not a class, but if we take 10,000 divided by 30,000, what's your answer? 3. So this decade, Bitcoin has already managed to surpass the gains more than Bitcoin has done since the turn of the previous century of 1900. And I'd be really curious to see if ever when Bitcoin or the Dow Jones was ever at 3. What's the lowest the Dow has ever been? Like 1870, 1880, whatever. I don't even know when it started. It was relatively new in 1900. And even at $2, Bitcoin was even cheaper than $2 at one point. I mean, it was $1, and I mean it's done 20,000 and 25,000 times. So when was the Dow $1? But let's go back to 3 times or 200%. And dividing 30,000 divided by 3 is again another simple mathematical answer, 10,000. When did the Dow get to 30 and leave 10? Close enough here. January, the start of the year. So 2020. When did it leave 10? Well, 10,000 is this line here. Looks like this point here. So at 2011. 9 years. It took 9 years in this run for the stock market to make that fantastic 3x move, 200%. Well, fantastic 1 year and 3 years, whatever. Now, when we look at how high the stock market could potentially go, one thing to keep in mind, we've seen Bitcoin go from like $1, $2 to 30, and it's going to be higher than 30 or higher than 25. It's going to be higher than 30. It's going to be higher than 30, 40, 50. In fact, the Dow Jones to Bitcoin ratio would be a very interesting one. I probably should have. I used to have the availability to actually show it on this chart, but there's going to come a time where Bitcoin will be worth more than the Dow, and significantly more. And the Dow will still be going up, I think, too. But the Dow can have significant gains because one of the big reasons why Bitcoin is going up so much is because the instrument it is priced into, which is the exact same instrument that 30,262 is. Thank you for tuning in. Bye-bye.